In the last 24 hours, a headline has been moving quietly but powerfully through financial media, political circles, and global markets. Reports have emerged suggesting that Jerome Powell, the current chair of the United States Federal Reserve, is facing scrutiny connected to a federal investigation. Before emotions take over and before misinformation spreads, it is important to slow down, separate facts from assumptions, and understand exactly what is happening, why it matters, and what it could mean for the United States economy and the global financial system. This story is not about drama. It is not about political loyalty. It is not about conspiracy theories. It is about trust, institutional independence, and the fragile confidence that holds the United States dollar together. To understand why markets are reacting, we need to go back a few years and look at a decision that initially seemed routine. The Federal Reserve began a large-scale renovation of its headquarters buildings in Washington. The project officially began in 2022. At the time, the projected cost of the renovation was approximately $1.9 billion. Large government and institutional projects often exceed initial budgets, so while the number was high, it did not immediately raise alarms. However, as time passed, the cost estimates continued to rise. By 2025, reports showed that the renovation budget had increased to approximately $2.5 billion. That increase alone did not automatically indicate wrongdoing, but it did draw attention from lawmakers, watchdog groups, and eventually federal prosecutors. During testimony before the Senate Banking Committee, Jerome Powell addressed questions related to the renovation. The issue now under review is whether that testimony was fully accurate, complete, and transparent. Federal investigators are reportedly examining whether Congress may have been misled during those hearings. It is critical to say this clearly. An investigation does not mean guilt. An investigation does not mean charges. An investigation does not mean removal from office. At this moment, there are no indictments and no official criminal charges have been announced. This is a review process, and the outcome remains unknown. So why is this such a big deal? The reason is not the renovation itself. The reason is the position Jerome Powell holds. The Federal Reserve is designed to be independent from political control. Its purpose is to manage monetary policy based on economic data, inflation trends, employment levels, and financial stability, not on political pressure or election cycles. That independence is one of the pillars supporting global confidence in the United States dollar. When that independence appears threatened, even symbolically, markets react. This story comes at a time when tensions between the White House and the Federal Reserve have already been high. President Donald Trump, who returned to office in January 2025, has been publicly vocal about his dissatisfaction with interest rates. From the first weeks of his administration, he made it clear that he wanted rates lowered aggressively. Lower interest rates reduce borrowing costs for the government and stimulate economic activity in the short term. They also increase inflation risk. Jerome Powell and the Federal Reserve have consistently stated that inflation remains a concern and that rate cuts must be gradual and data-driven. This disagreement became public and intense. Social media posts, press comments, and interviews made it clear that the president wanted faster and deeper cuts, while the Federal Reserve resisted political influence. The president does not have the legal authority to remove the Federal Reserve chair simply for disagreement. The Federal Reserve is not a government agency in the traditional sense. It operates independently, and that separation is intentional. However, under the Federal Reserve Act, a chair can be removed for cause, including proven misconduct. That legal reality is what makes this investigation so sensitive. As reports of subpoenas and testimony reviews surfaced, financial news networks including ABC, NBC, and major business outlets began covering the story, not because charges were filed, but because the precedent is almost unheard of in modern United States history. A sitting Federal Reserve chair being examined under a criminal lens is extremely rare. Markets do not like uncertainty. Markets do not like institutional conflict. Markets do not like the perception that monetary policy could be influenced by political pressure. This is where the story moves beyond Washington and into your wallet. Over the past year, global investors have already been reassessing their exposure to the United States. The trend often described as de-dollarization has gained momentum. Countries have been diversifying reserves, reducing reliance on U.S. Treasury bonds, and conducting more trade in alternative currencies. In 2025, the United States dollar index fell sharply. A move of over 10% in the dollar index is not normal. It reflects a loss of confidence relative to other currencies. At the same time, hard assets surged. Gold reached historic highs. Silver followed. When investors lose confidence in fiat currency stability, they move towards assets that cannot be printed or politically influenced. The connection is simple. If investors believe the Federal Reserve is no longer independent, then the credibility of the dollar weakens. If the dollar weakens, it takes more dollars to buy the same real assets. That is why gold prices have risen so dramatically. After reports of the investigation surfaced, precious metals reacted almost immediately. That reaction was not emotional, it was strategic. Jerome Powell responded publicly, stating that the Federal Reserve would continue to operate independently and that monetary policy decisions would not be influenced by political pressure or intimidation. The broader question now being asked by analysts is not whether Powell will be charged. The question is what message this situation sends. Powell's term is scheduled to end within months. The president will soon nominate a new Federal Reserve chair. That reality has led many observers to ask a logical question: why now? Why initiate or elevate this scrutiny when the current chair is already nearing the end of his term? One interpretation is that this is not about removal, it is about leverage. Another interpretation is that this serves as a warning to future Federal Reserve leadership. The implication being that resistance to political demands may come with consequences. If that perception spreads, the damage could extend far beyond one individual. The strength of the United States financial system has always rested on credibility. Investors believed that the Federal Reserve would act independently, even when decisions were unpopular. That belief allowed the dollar to function as the world's reserve currency. Once credibility is questioned, rebuilding it takes years. This is why global markets are watching closely. This is why foreign governments are paying attention. This is why institutional investors are adjusting portfolios. This moment sits at the intersection of politics, economics, and trust. No matter how this investigation ends, the signal has already been sent. The perception of independence has been tested. In the short term, volatility is likely. In the long term, policy decisions, appointments, and global reactions will determine whether confidence stabilizes or continues to erode. For everyday Americans, this matters more than headlines suggest. Interest rates affect mortgages. Currency strength affects purchasing power. Inflation affects daily life. This is not a story about personalities. It is a story about systems. The coming months will reveal whether the Federal Reserve can maintain its credibility under pressure and whether global confidence in the United States dollar can be preserved in an increasingly uncertain world. What happens next will not be decided in one courtroom or one hearing. It will be decided by actions, restraint, and the ability of institutions to uphold the principles they were built upon. This is why the markets care. This is why the world is watching.